Welcome to the JWK show. We talk about what's happening in crypto and we keep things short and concise. Just as we had the price of XRP recovering, beginning to move back up, going as high as 66 cents, XRP dumps back down right away after, which is not a surprise. But guys, keep in mind that the entire crypto market is taking a pretty big beating. Ethereum trading at $33.54 and Bitcoin trading at $65,000, going as low as $62,000. So with the break below of the three moving averages right now, it's not looking too good for the crypto market. We could see potentially a pretty big correction coming in for Bitcoin and the rest of the crypto market. XRP trading at 60 cents, going as low as 57 cents. And as we said, guys, with the crossover of the MACD, we are expecting the XRP to go down in the medium to long term, possibly within the next couple of days to weeks. But with the stochastic in the oversold area, we could see a short-term reversal as well, which we kind of did see with yesterday's pump. Now, XRP is trading at 589. We have 58 cents. And we had a weird glitch going on CoinMarketCap as well during the crash or correction for crypto. We can see that the global crypto market cap was apparently $890 billion, down 64%. But guys, this was just a glitch on CMC. Now, as we said, guys, the 1% love to use the 589 number, right? We have XRP 589. Brad Garlinghouse following 589 people, and BlackRock is donating $589 million to bolster financial inclusion. We also have in 2022 North Korea spending an estimated $589 million to build and maintain its nuclear forces. We had the 589 number again. Guys, even Kim Jong-un is using the 589 number. And where things are just going on in the crypto space, we have new spot listings for BitMEX. We have XRP and Autumn, which is great to see. But we also have this happening on the BitMEX exchange. We have Bitcoin briefly hitting 8.9K after a whale dumped massive amounts of Bitcoin on the BitMEX exchange. So this should not be happening unless there is low liquidity on the BitMEX exchange, which I highly doubt. So once again, guys, we have a lot of fake liquidity, fake USDT in the crypto market. We have just in 1.5 trillion asset manager Morgan Stanley warns US dollar stocks are at risk. As we said, we could see a recession hitting in or a black swan event. And we have from the Big Short tweeting this out from Nick Allen. He says, Bitcoin down to $2.70 a pop. So glad I didn't buy in on that mess. This was back in 2011. You guys know this was the biggest mistake that Nick Allen could have made. Bitcoin now trading at $63,000. So the Big Short is telling us the exact same thing, guys. This is the time to invest in the cryptocurrencies, XRP, when the price takes a big beating, not when the price goes up. And Japan might be the reason why we have the stock market and crypto market down. We have Bank of Japan hiking rates for the first time in 17 years. The central bank has ended yield curve control and discontinued purchases of ETFs and Japanese real estate investment funds. There we go, guys. We could see the entire Japanese economy falling, and we have a more in-depth video from Peter explaining the current situation with Japan in stagflation.
It's official. Japan is in stagflation, somewhere it has not been since the 1970s. And America's not far behind. Really, our best hope is change the definition of stagflation like we did with recession. The nation of Japan is currently frozen in the headlights, stuck between a weak economy on life support from cheap money, super low interest rates, and a crashing yen as a result of those super low rates. The yen threatens the Japanese financial system and it threatens savage price hikes for Japanese families who overwhelmingly depend on imported food and energy. In short, Bank of Japan needs to hike interest rates to save the yen and head off inflation, but they can't hike because of economic weakness. In fact, Japan just entered recession a few weeks ago. Now, the Bank of Japan had been trying to carefully maneuver between the two, so a little stimulus here, a little jawboning there, so the public does not notice what's happening. Well, last week, Japan's unions scrambled the chessboard, meaning inflation is coming and it could be here to stay. So Japanese unions typically coordinate pay negotiations every year. It's called the Spring Offensive, and an intentionally military metaphor. Japanese unions used to be surprisingly violent. This year's offensive was a hand grenade. After literally 30 years of stagnant wages, this year Japan's large companies granted 4% annual pay hikes. Small and medium companies, which represent millions of workers, went all the way to 6%. And some large companies, it went much further. So Toyota, which is a bellwether for corporate Japan, granted every last yen the union asked for. Honda and All Nippon Airlines both granted almost 6%. Mitsubishi Heavy gave 8%. Nippon Steel, which is in the news for buying U.S. steel, forked over 12%, the biggest jump since 1979. Retailer Aeon granted 7% to its 400,000 part-time employees, signaling the wage hikes are trickling down to just about everybody, which is the Bank of Japan's worst nightmare. Now, all central bankers know that once inflation gets baked into union negotiations, it can be very, very hard to uproot. So, in short, Japan is already in recession. It's got 50% price hikes coming like a golf ball in a snake thanks to the weak yen, and now corporate Japan just baked it in. So what's next? Brought to you by Unchained.com. The government of Japan is good at many things: crime, immigration, fixing potholes. What it's not good at is managing the economy. In fact,
right, so as Mr. Poole has said, it all starts in Japan, and then it will affect all of the economies as well. So basically, everyone is screwed. That's it for the video.